following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rockin' music means it's time once again for the Option Block, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as the old Options Insider Radio Network. And joining me on the old program today, starting off, let's go the opposite way today. We'll throw Andrew off his game. Starting off with the Rock Lobster himself, dialing in all the way from Maine. Good old Andrew Giovinazzi from OptionPit.com.
I don't know what to say being first. Mike Tusaw's here, and I don't understand.
Your
totally
worldview is shattered.
The sky is green and the sun is blue, and I'm very, very confused now.
Let me hit the stop button and we'll start over just to reset you, because I know how off kilter you are now for the rest of the show.
I'm screwed up myself. I about got dizzy when I heard that.
There you go. Well, to prevent
I thought you were going to tell me there was another Apple earnings call today or something.
My birdies aren't that good, unfortunately. And of course, listeners.
What was that Grateful Dead tune? The sky was yellow and the sun was blue. Dun, 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 dun.
I don't know that one, but I'll take your word for it. I'm not a big Deadhead, unfortunately.
Yeah,
I missed that era.
I barely remember any Grateful Dead shows I went
Passing around the old Betamax tapes of the Grateful Dead shows. I kind of missed that era. But and of course that voice, listeners, is none other than Uncle Mike Tusaw from Know Your Options Inc., beaming in from scenic and perhaps even sunny St. Charles, Illinois. Uncle Mike, welcome back to the show, sir.
Always a joy to be here, but it's about as sunny here as it is in Chicago, unfortunately.
Yeah, you don't exactly get too much of it. A different climate from us here downtown, out there in good old sunny St. Charles. And last but certainly not least, joining us on the old Options Express hot seat, good old Alex Jacobson from Options Express. Alex, welcome back to the show, to you as well.
Hey, Mark, good to be here.
This is the first time I think we've had you on in succession. We've had you on sporadically in the past. This is the first time we've had back-to-back Alex for our listeners, giving our listeners a full dose of the Alex, if you will.
Well, it should be fun today.
Speaking of fun, we're also going to be joined a little bit later by Anthony Crudele from eMini Executors. Should be a very interesting discussion on executing and trading eMinis. But before we do that, we're going to dive right into the trading block.
The Trading Block.
All right, and welcome to the Trading Block. This is, of course, where we break down the day's action. And it was a relatively mild day on the street for most of the session, unless you're looking at a few specific names. The broad indices were mixed on the day. S&P and the Dow closing down fractionally on the day. NASDAQ feeling the tech love, closing up fractionally on the day. And the VIX also closing up about 2.5% to about 15.5 on the day today. It was a mixed day on the street with a lot of names moving in a lot of different directions as the major indices show you. Then tech was kind of leading the charge today with two big names. You may have heard of them, Apple and Facebook, both rallying significantly on the day. Facebook ended up closing the day up 8%, a little over 8% to nearly 26 on the day, up nearly 2 handles today. And Apple continuing the rally, up 18 handles to 589.5 on the day today, too. I guess, Uncle Mike, we both missed our 505 bids, huh?
That's okay. This is one of those ones where it's still a bit too choppy for my taste.
What's wrong with a little volatility every now and then to let you know you're alive?
I get enough of that from the metals, and if we come down again though, to the 500 level, it'll be mighty hard for me to stay out of it. It was hard enough with it the last time, but if we get another opportunity like that, which I think we might, it's going to be hard to stay out. I will say that.
Yeah, I think it was tempting for a lot of people, and of course, vol started getting nice and bid up down around that range, and everyone and their mother was looking at that 500 level as a very key sentimental and technical level. Didn't break it, but got down to 505. I know a lot of people were working offers on 500 puts and maybe south of that 490 and stuff like that, and didn't get close enough to those to really put those into play. But a lot of people are probably wishing they did right about now. Of course, Facebook got some love today too, trading on some serious volume, up over 60% more volume than on typical trading day. A lot of that coming from a variety of factors. Looks like an analyst upgraded the stock, which helped give it some love. He moved it up to a $33 price target. Kind of interesting considering we were just dancing around the 18 handle not too long ago. So this guy obviously has some love here for Facebook. Andrew, what was catching your eye in all this movement here, Apple, Facebook, and other stuff? Anything really catching your eye specifically today?
I thought the Facebook actually move was kind of interesting. I think it might be a little bit more off to the races. Volatility actually got bid up in the rally, so I think it was a $19 stock like last week, and now it's 26. So that should bring some of the momentum heads into the picture. So, but the vol's still cheap, 46 volatility for November options expiring on Friday. So, at this point, when the stock's like this, actually, I just put our blog out for option pit on it. So I would not be surprised that those options do look underpriced. So I do. Facebook, I was looking at most of the day, watching the market seesaw back a little bit on the fiscal cliff on, fiscal cliff off, Greece financing on, Greece financing off. There's a lot of strange wild cardness out there on all that stuff. So, watching the VIX and not having the volatility not get bid, but a lot of the near-term options are getting bid. So I thought that was a kind of a strange, it's almost like the market is feeling like, okay, this will get solved, but in the meantime, we're going to be nervous about it. And that's kind of what the volatility market looks like right now.
Doesn't surprise me that we had a bit of an upside vol crash in Facebook. All the news for the past few weeks has been unlocking shares. This thing's going to get hit. Everyone was prepping for continued downside in Facebook. People were writing upside calls. Of course, those calls are no longer upside at this point. They're deep in the money. So a lot of guys blowing through their strikes and scrambling to buy it back. So it doesn't surprise me we had a bit of a pop, not just an underlying, but in vol today as people were scrambling to take off those losers. But you're right. I think the extent of the underlying move today, that certainly caught me by surprise. Just a week ago, 2 weeks ago, we were talking about Facebook winding down into the mid-teens and, what was going on there. Was it safe to write the 15 handle, the 17 handle? What was going on in Facebook?
Yeah, selling puts in there. I thought, and I thought that Facebook in general has been a great 19 put sale when it craps out. And it will, unless something drastically changes in it, probably for a while. I don't know, judging from our rally today, when we're going to see that next. But it's been, at least at option pit wise, that's been something pretty dependable for us as far as a way to get long.
Yeah, you've been able to go back to that well several times, and it's worked out all right for you on that 19 level. You can leg into bullish risk reversals from there. There's a lot of different ways you could have played it that would have repeatedly worked out fairly well.
Because it just have a hard time believing the franchise is not going to be worth. I just can't imagine Microsoft not stepping in there at $15 and saying I'm going to buy some I'll buy this company for $25 billion.
Yeah, they already have a massive stake. I forgot what size it is, 5 or 10%, something along those lines, I think.
They made some money, I think, on that. So,
they've done all right.
And they'll be happy to make more. And, it's just another way to get, Office on your desktop through Facebook. Who knows? But
God, if you'll pay $8 billion for Skype, what the hell would you pay for Facebook? $100 billion? I mean, there's no limit to the value of Facebook under that analysis.
I know, and they're just very. I'm starting to see ads on Skype now, so they're just starting to monetize that thing. They're probably going to end up making a lot of money on it, but they don't. I think they wait till they have to. They spend big dough when they spend dough. That's all, I guess. The easiest way to describe that.
Well, they're swinging for the fences over there. They're swinging for the fences over there in Microsoft these days. A lot of interesting shakeups going on. The number two, the number two guy over there. A lot of people had seen him as the heir to Ballmer. He got shown the door recently. A lot of shakeups going on in Microsoft land. They have all this, pretty much putting all their eggs in the Touch and Windows 8 and Windows 8 phone baskets. A lot of radical departures, a lot of radical shakeups going on over there. I think a lot of old school Microsoft watchers might be scratching their head saying, what is this company? But yeah, Ballmer re-solidifying his hold on the company. That's the old saying, if you come at the king, you better not miss. And it sounds like that Steven Sinofsky guy made one too many enemies for himself during his tenure over there at Microsoft. So he is the heir apparent no longer. Yeah, a lot of interesting stuff going on in tech land these days. Of course, speaking of technology,
it's still cheap too.
Yeah, you're right. It is.
It's not like technology. Microsoft. It's like Intel. Like Intel could have some problems. I'm still think they somehow will get their chips on smartphones and things like that at some point. But clearly the PC thing. But you're not paying a lot of money for these companies here. I mean, you're paying. It's got like 4% dividend yields, and it's not a lot of risk in a lot of these companies. 9 times earnings for Cisco. You're not going broke, I think, with these companies at this point. So it makes the trading strategies for them, and from an investment point of view, much more interesting because there's just, there's not a lot of downside. Every time I see somebody with a smartphone, I'm like, oh, they're going to be buying Cisco something at some point to support that network. So it just, there is, and then of course then you find interesting option strategies around that stuff. So it's not like we're in the tech land of 2000. I remember being in San Francisco, the Giant Stadium. They just built the Giant Stadium. It was like 2001 or 2000, and everything. All the advertisements were Schwab.com, and the sun was we put the comment.com and all this crazy stuff. When we had the internet, the bubble, and then like by 2002, all those signs were gone. It was just Charles Schwab, not Schwab.com. Sun was gone. It was just amazing how they all got just all of that .com everything, all gone off all the advertisements in the San Francisco Giant Stadium at Pac-Bell Park. It was really fun. Now it's not even Pac-Bell anymore. It's I don't know who bought them.
It wasn't Pets.com Stadium for a while there.
No,
that would have been fantastic.
Pac-Bell Park, and they got bought, I think, now by AT&T or somebody. But I think it's probably a lot more sustainable. Like Facebook at $26. What was the last company that was worth X dollars that had $1 billion? That had that kind of reach.
It's unique.
Something on a desktop.
It's unique.
So it'll be interesting to see how it folds out. But anyway, that's our thesis for the 19 level in Facebook. And until something changes, probably it'll stay that way.
Microsoft, an interesting one too. It's been usually going into earnings the front month and the several months out straddles have been some of the most reliable rights in the business. The thing never budged. And if you actually went long some straddles going into last earnings and coming out of it, you've actually had some reliable gamma scalps over the past few months here and few weeks as the stocks actually had a little bit of movement. So this is unusual territory here for Microsoft, which is kind of languished.
The gamma of options, like the short-term stuff, is really benefiting from the, in general, illiquidity that we have. Just have a couple dollars, chase any one of these stocks, and they're going to run. Like any big fund that wants to start, buying Microsoft. It's just that the environment, all these fractured liquidity environments are finally kind of coming to roost. So when things move, and the momentum guys, it's not that they even get a hold of it. It's just they can make things move so the market just moves so fast because you can't fill anything. You know what? Well, obviously, when we hear later about the importance of execution and watching how things trade, it makes a big difference on the type of position you put on if you think that the underlying can, when it does move, it's going to blow out $1, $2 move instead of just a 30-cent move. So, all those things go into how you formulate any kind of, putting on one of these positions. So.
All right. Thank you, Andrew. And now it's time to close out the old trading block and dive right into the interview block.
The interview block.
All right, and welcome to the interview block. This is, of course, the portion of the show where we bring on a guest, some luminary from throughout the world of options and futures, and then we proceed to pick their brains right here on the show for your listening enjoyment. And today's guest is Anthony Crudele. He is the head trader over there at eMini Executors. Anthony, welcome to the program.
Hey, great to be here. Thanks for having me.
All right, and Anthony, as we are wont to do with all of our first-timers here on the show, why don't you give our listeners a bit of an overview of your background in the futures business and how you worked your way over to eMini Executors?
Okay. I started right out of high school as a runner on the trading floor. It's actually kind of a long story how I got into it. I got into the business by accident, but I started as a runner after I had actually a really bad car accident, and I actually ended up, like I said, I got in a really bad car accident, head-on collision, broke my left femur, and was unable to go. And the doctor goes, well, you're not going anywhere. You're going to have to be, trying to strengthen that leg, so do what you can here and put business school on the sideline. So I ended up looking in the paper and found a job as a runner. I became a runner in the meets.
It's ironic to take a job as a runner with a broken leg.
Well, I picked that because he told me what happened was, it's so funny, but he's like, you need to do something to strengthen your leg. You're going to be doing a lot of rehab, because I actually had to have surgeries and stuff. I was never casted. And so I ended up saying, look, runner, I'm going to strengthen my leg. Okay, great. I go downtown. I go to the Chicago Mercantile Exchange. Really didn't know anything about it. Went in, applied for a job at Lynn Walduck, got in, was a runner in the meets. I remember the first time I went on the floor, I'm like, this is an absolutely amazing thing. And I'm like, I don't know really that I'm ever going to have to be able to leave here. I ended up working in the Eurodollar options, and then I found my way into the S&P 500 about a year and a half after I began. Then I worked for, in my opinion, some of the best traders the pits have ever seen on the S&P 500. And then at a really early age, I became one of the youngest members of the Chicago Mercantile Exchange and traded in the pit for about 3 to 6 months, somewhere in there. Just wasn't cutting it. Had high expenses, was blowing through my account really fast. And they had this thing called the eMini S&P, which was really frowned upon at the time. And those of you who have been around the pit know that at the time the eMini was like, pit traders were going, no one needs to even trade that eMini. But I said, you know what? With the limited amount of capital I have left, and I was always a technical guy. I watched charts, I looked at things, and I was in the pit. I couldn't execute. I mean, they didn't trade with me. It was political back then, and I was a young guy, really young guy. So I started trading the eMini. From that point, it took me a little while to get my bearings with that. I went through lots of trials and tribulations. And now, about 14 years I've been trading it now. And, I've traded millions upon millions of eMinis. There's been times where, I've even been 5 or 10% just myself of the daily volume. And I've seen the whole evolution of it. And then, and I recently started eMini Executors.
Now, it's interesting that you mentioned that. Tell us, you were telling me we were talking earlier, you had a pretty interesting war story. What's one of your favorite war stories about trading in the pits, or actually not in the pits necessarily, but when you first started trading the eMinis, what are some war stories that you can share with our audience?
Well, it's funny you talk about that war story that had happened to me. That was, well, let's just start. First of all, the eMini, the number one war story I have is when I traded over 1,000 lot. And I basically, I started off accumulating a position. And see, back then, when you were trading the eMini, they didn't have limits. Okay, like when you go to the firm and you remember, I was unable to really, you couldn't, like they didn't stop you like the way they do now. So what I did was I just kept accumulating a position within a really short amount of time. And by the time, I finally got loaded up, I just kept averaging. And they were sitting there, and I had to just turn around and just obviously I had to lift the offers. I was short, and basically put me out of business. And that was my worst story and I actually had been on a real hot run, and I just started getting a little bit carried away, and I got caught.
I think that's interesting. I'm glad that you mentioned that, because one thing that I always tell people, the people that always brag about their winnings, there's always the credibility issue in my mind, and the people that actually admit to losing, which we've all actually have been there as traders at one point or another, it's good to hear. Now, with that being said, maybe tell us a little bit about your trading style right now. Do you like to average into trades? Because I know we've talked a little bit about your technique. Sometimes you go in big, sometimes you take a smaller position, sometimes you take no position. Maybe tell us a little bit about your trading techniques along those lines in regard to money management.
No big, no small, no, not at all. That's the way I approach it now. You see, to me, the number one reason why we have eMini Executors is to fill the gap that I feel the trading industry desperately needed, is understanding the true art of execution. You see, because to me, not every trade is the same, so why would you trade every trade the same? And going back to that war story where I had accumulated a much bigger position now, and the only reason I was even able to accumulate that position was because I was desperate. They didn't have limits on me. I got myself way out of control. I wasn't trading according to a risk price. I was just going in there and saying, you know what? I like this trade, and it turned into a hope and pray scenario. Now I've learned, and I've got myself in so many bad positions in the past that I know that, if I know my risk per day and I know my risk per trade, there isn't a trade out there that I can't execute. So I don't go into it with a preconceived position size. I go into it saying, if it's a 2-point risk and I can risk $1,000 on this trade, I feel that's what it is, then I know it's a 10 lot in the eMini. If it's a 4-handle trade and I can risk $1,000, then it's a 5 lot eMini position. So I adjust my contract size now based upon a risk per trade and a risk per day. Now, my rule of thumb is, whatever you're comfortable risking on a daily basis, you divide it by 3, and that's your risk per trade. Now you adjust your contract size. See, so a turning point for me was I learned that there's certain trades I could trade bigger, closer to risk, increasing the upside possibility, but not increasing the downside. Then there was times I could trade. Sometimes I looked at trades 4 handles away from the risk price to stop, and I'm going, I like it. But you know what? I don't know that we're going to actually get to the area I think that, where the entry comes from strategy. So let me just start them really small here. So I learned that you have to be able to trade around prices. You can't live and die in a price, but you have to be able to be held by a limit. Because if you're not held by a limit, they're going to blow you out. That's what they're going to do, because it's happened to me more times. I mean, just to give you my own personal experience, I'm not proud of this, but at the beginning of my career, I went through 3 trading accounts, had to borrow from traders, had to do what I had to do to get back in. And it's because I was going in and I was kind of just trading. I wasn't going in and just, I didn't have a plan. I wasn't structured. And I thought just because I had the badge, the jacket, and I was on the trading floor that, and I had been around the business for several years, that I was just going to be easy. Go in there and trade strategy. And the traders, they didn't tell me that. I was watching traders going, how am I trading the same numbers as this guy? He's making money and I'm losing. And it was because they understood execution. They trade 1 lots when they didn't like it. They traded 5 or 10 lots when they thought it was okay. And they trade 50 lots when they really liked it. And I found myself doing the exact opposite. I was trading bigger, putting myself in positions to lose, not in positions to win.
So in other words, when it's kind of like the mistake of a lot of rookie traders, in that when things are going worse, you end up putting in more contracts because the rookie mentality is along the lines of, well, I got to get back to even, so this is the only way to do it.
Exactly. And nowadays, that's why I say, like, the worst story for me was when I just got so big in such a really short amount of time. I just kept adding to a position in a slow market, and then I had to turn around because I was loaded up so big, and I just put myself in a position where I just had to get out. Otherwise, I was have no more money left, and I didn't after that anyway. But it was because I just wasn't. I was just, one trade turns into a disaster in this business if you are not structured properly. And I'm proof of that. And then I learned how to turn it around. I had to take my smallest trading account was the account that I turned into my biggest years. And it just all because I had a risk per day, a risk per trade, and I was able to wait for the opportunities that made sense and go after them with bigger size, closer to risk. And that to me is what's helped propel my career.
Anthony, do me a favor, walk me through a little bit of what you guys do over there at eMini Executors. I'm sure a lot of our listeners are probably like, I like what this guy's saying, but what do they do? Are you guys an educational service? Does someone come to you and say, hey, take my account and execute it for me? Is it a little bit of both? What do you guys do over there at eMini Executors?
Here's the way I look at the market. Here's the way I look at it as traders coming into the world. See, back then, when I started in this business, I learned from watching other traders trade. How do you do that now? And I said to myself, everything I've went through, how do I explain to someone else? How do I show them what I know? How do I help traders learn from my mistakes? The only way I felt it was possible was to put them in a live trading room with me on the mic, set up my charts exactly the way for them to see it through a viewer, hear me talk, and walk through my trades. So what happens is, we have two rooms. We have a live trading room, which I'm on the mic Monday through Friday, and the room is open 24 hours a day, and there's signals in there where people can go and trade them. But I'm on the mic for specific hours a day, and I walk traders through what I'm seeing. So, for example, say we come in this morning. I said there's really the key thing to look for in the eMini S&P 500 is we're going to be watching what the XLF does and what Apple does. Why? Because I felt from looking at the charts of my homework, I said if Apple's up and they're bidding the technology sector up through Apple with NASDAQ and the financials are weak, the S&P is probably going to be a light volume, choppy trade. Because lately I've noticed if the financials and Apple are going in the same direction, then that's a real dominant trend. If they're diverging, then we're probably going to be choppy and you have head fakes. So when we came in today, I watched that. And when we had divergence, the S&P was chopping around. And there was other things that we talked about as well. But the whole point of it is that they could hear and see through my eyes or from my charts, hear me talk and see what I'm thinking. And see, when we were in the pit, like I'd be standing in the pit and I'd be going, I'm getting ready to buy him here. And the guy he'd be like, be careful. Look at the transports are selling off. And I'd be like, oh, you're right. Because I want to be long. And it's like, I feel like traders love to hear what other traders are doing and thinking, especially ones that have been successful. So I created an online room that I'm the leader in the room, but we have lots of other people that we've trained and other traders that are really well experienced in there talking about what's happening. We all have the same goals. So now we've created that camaraderie where people could come in to the business, or even guys who have been around for a while, and they're looking for a home to go in a room with guys and girls that have the same goals as them. And they could go in there and we could talk about it. And they have someone like me who watches this thing and been watching this markets for 14 years, trading them actively to give them that guidance. The other room is when I teach. That's when you could come in and it gets, it's a more intimate time where the trader can come in and be like, Anthony, I saw this trade the other day. The first 15 minutes of every class, I go over specific trades, and then I talk about mindset skills and execution skills. Because once again, I went through the process of not knowing. I thought I had the foundation just because I was around the business, but until you really narrow it down and you know exactly what you're looking at and coming day, I'm a stickler for being prepared. I feel like a trader's a quarterback. Peyton Manning practices all week long, or Tom Brady to play on Sunday, and they have that time to perform. A trader, the market's open all week, and traders tend to be looking to trade more than they actually sitting back and knowing when or what they should be looking for and really taking advantage of those situations. And that's what I think that this industry, and that is why I brought that to the table, because I felt it was important. Trading's given me more than anything I could possibly imagine. I mean, look, I live in Naples, Florida, and Chicago. I couldn't ask for a better life. And from what I have experienced in my life, I'm trying to help other traders get the same out of trading that I've gotten.
That's a lovely, heartwarming story there, Anthony. But, you know, I think a lot of our listeners also, obviously your focus is on eMinis, eMini Executors is there in the name. Our listeners, obviously very options focused, very options centric. Do you guys get into any of those relationships, the eMinis and trading options on the eMinis, maybe using any interrelationships between the two, or are you exclusively focused on the eMini side of the equation?
No, I actually do dabble with the options every now and then, but we actually have a nice subscriber base that comes into the room and wants to know my big picture thoughts, and they utilize it for because there's two options. You could come in and just listen and be a part of our trading room, or you can come in and you could take education. So there's two options there. We actually have a decent amount of options followers that come in and they'll say, okay, where's his big area in this? So like I'm watching Apple, I'm watching the financials on and I'm watching the Dow, I'm watching the NASDAQ, and I'm looking at big important areas for them, because those areas, those big picture areas, will always supersede any short-term look you're looking at in the eMini S&P. And if you're looking to make a few points in the S&P and you don't know the big picture on all the markets, on where the big areas are, then that little trade, you're less informed. Big picture supersedes it. So we have a lot of guys that come in and they'll be like, where's he looking? Where's his big area? So, and that's where the options guys can say, well, look, maybe they could utilize the futures, to lay off some of their options here. Or maybe they're looking and going, well, if he thinks this is a breaking point, and then maybe that helps with me and what I'm carrying in my options position. Because options traders, they're in for a much longer period of time than an eMini scalper. But my whole premise of everything I do is the big picture supersedes the short term. Any trader that comes in and doesn't know the big picture and is trading short term is way behind. So that's how the options guys, I feel, implement what we're looking at to what they're doing.
Sounds good. Well, Anthony, just so everyone knows, we do have Know Your Options is doing a webinar tomorrow night, or actually tonight, because this show is we broadcast on Tuesday night at 9:30 p.m. Eastern Time, 8:30 p.m. Chicago time. Can you give us a little bit of a sneak peek of some of the things you'll be talking about tomorrow night?
Well, I'm going to be talking about the basic understanding of what execution is, and understanding that risk per trade, risk per day, and then those are the basic things I'm going to talk about. But then I'm going to get into the more detailed stuff and how I'm going to show a couple specific trades on a specific day where you have Apple or the financials, two markets that I've been watching very closely lately, how those markets can signal or trigger a low in the S&P, and how to use those other markets, how the markets, in my opinion, are all intertwined. And the market that's in the most critical area will tend to lead the entire market, at least for that initial move. And I feel that being on the pulse, being in the now, being in control of what's happening, you have to know what to look for. And that's kind of where I'm going to talk about and show people that you can be trading one market, and really, if you're looking at that market only, or you're looking at maybe one other market, you may be missing what's ultimately happening in your market.
Sounds good. So with that in mind, that's pretty much wraps up our segment for today. Anthony, thanks for coming on, and
I appreciate it.
We look forward to the big webinar tomorrow night.
All right, everybody. Thank you very much for having me.
Great. Thank you, Andrew.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want. want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Express Block. This is, of course, where the boys from OX hold down the reins of the show. And today we have Alex Jacobson doing the honors. So, Alex, what do you have in store for our listeners today, sir?
Well, not a lot to talk about. As Andrew mentioned, it was a quiet day in the market today, and it was all Facebook, all Apple, a little Amazon. I talked to the desk a couple minutes back, and they were saying it's becoming like a broken record. It's Facebook and Apple. So not a lot to report. Market closed near its highs for the day. As we've already mentioned, NASDAQ was up, led by Apple and Facebook. A couple seminars coming up. December 1st, the team will be in Houston. And December 8th, which also happens to be my birthday, the team will be in Boca. Those are both Saturday dates. Those are free events. And if you want to come to one of those events, just come to the website. You do not need an account. If you're just somebody who wants to come and learn about options and listen in, just come to optionsexpress.com, click on the education tab, and you can register for one of the free seminars. And as I say, the December 1st in Houston and the 8th in Boca.
But, Alex, it's interesting you mention, what's coming up, because one of the things we have been discussing quite a bit on the show is the possibility, or I should say the impending possibility of these mini options, particularly the mini Apples and the mini Googles, the ones everyone's been very excited about for a while. Of course, they got SEC approval a while back, but there's been a lot of talk about when they're actually going to go live. I know John and the guys from OX have been talking about it internally and mentioning what they've been talking about on the show and the different symbology and other behind-the-scenes kind of devil in the details stuff that goes into actually launching a product like this. I know a lot of us were hoping these things would be on the radar relatively soon. We just got word today. The first exchange has announced when they're going to launch these things, and it was the ISE, and they announced they're going to launch the mini options on March 13th of next year. So that's a substantial amount of time away. I think a lot of people were hoping they might even get them in Q4, at the very least, very, very early Q1, not pretty much towards the end of Q1 like we're seeing with that, which I think is going to surprise a lot of people. But that should go to show for a lot of our listeners that, there is a lot of behind-the-scenes stuff going into Opera, OCC, the symbology, everything that goes into a product like this. Alex, have you been hearing any more on the grapevine internally about what's going on with these minis and what OX is doing to prep these things and get them ready for launch?
Well, the development team has been working, and their expectation was a January release. So that March date is kind of new news, but I think it's a demonstration of how hard it is to bring some of these things out. The change in symbology the industry did a couple of years ago gives us phenomenal flexibility, but generally people lock down their systems this late to year end and are reluctant to do a lot of changes. So I suspect that part of this is just the point in the calendar we're at, that people have their systems locked down for the balance of the year, unless it's an urgent change. I spent a decade at the ISE, and being an options guy, one thing I learned was not to overpromise technology. And I know I've told this joke before, but we would come back from customers and say, well, can you do this? Can you do this? And you'd go to the technology guys, and they'd get so tired of you coming back in with changes that there was a joke that the standard answer was everything will be ready in 2 weeks. I think what you're seeing here is it just takes more time to write to this. There's a lot of background that has to be accomplished here, because all of a sudden you're going to be able to have it covered right on 10 shares of stocks. You're going to have to change retail margin systems. There's a lot of work that I assume has to be done at OCC. So just you can't turn these big ships on a dime the way many people would hope.
Yeah, I think that's a lot of people's hope. Particularly, ISC is one of the two exchanges that listeners will remember who were initially vying for the ultimate product. They both came out with a release or a concept release for a new product based on these mini contracts. It was ISE and NYSE Arca. They went back and forth with each other and with the rest of the exchanges to get something worked out. The final product was a compromise between the two. But you'd think if anyone could be able to get this thing up and running pretty quickly, it'd be one of the two exchanges that initially conceived of the product. And yet ISE has announced this. And I guess given that, I wouldn't expect another exchange to jump the gun because they all have the same members. They all have similar tech. If the members are telling ISE we can't launch till March, they're not going to go to SIBO and say launch in January, as much as we might want it to happen.
Yeah, that's it exactly. The membership is so overlapping that, I mean, if you look at market making today, a lion's share of it is done by a handful of firms that participate on all exchange or almost all exchange venues. And there's politics in this too, and I kind of don't want to open a Pandora's box, but I will open the Pandora's box. We talked about this last week with cash settled, and one of the stumbling blocks often, or the path that takes the most time, is OCC. And the OCC board is a lot like the Security Council at the United Nations. Unless you have a unanimous vote, one veto can be a setback, and that's a big challenge because a lot of innovation that we when I say the end user side not wearing the exchange hat anymore, a lot of innovation that you would have hoped that would have come out of Symbology, where you now have the flexibility to create, lots of things, minis, more end of months and things like that, seems to be taking a long time. And one of the challenges is on the clearing side.
Yeah, no, a lot of people, I think, tend to overlook or forget just how many devils are lurking in the details on the options side. And really saying, I mean, it sounds like everyone and their mother, Alex, I don't think you were down there. It's probably one of the first OIC conferences you've missed in a while. But I was down at the show back in May, and no one could shut up about these things. Every exchange guy, every brokerage guy that I met down there, every trading firm guy, no one could shut up about Mini Apple and the potential that it had for the business. And this was in May. So to get these things, I mean, and in retrospect, in a historical perspective, that is a pretty quick turnaround for the options business to go from announcing two competing products around the April-May timeframe to having a listed tradable product, hopefully by March. Like, that is pretty quick historically, though. I think a lot of our listeners would hope it would be a little bit faster. I'm sure you guys probably do it OX. This is a home run product for the brokerage firms. 10x contracts for what, same price for you guys? Maybe some discount. I'm not sure. The pricing hasn't been worked out yet, but it's still getting more people trading more often, being able to hedge their weird odd lots of Apple and Google with options. I mean, this is just a no-brainer for you guys. I'm sure you probably wished it was launched yesterday.
Yeah, you know what Murphy's Law says though? The day they come out with the mini contract, the 10-share contract, Apple will finally announce its long-awaited split.
Exactly. They're just waiting for that moment just to screw the options business.
Yeah.
They said, that's the moment we've been waiting for. We no longer need this prestige of $600. We want to be a $60 stock again.
Yeah,
that would be fantastic.
You ask yourself that question. There's so much stuff up there that's triple digits. I mean, everything from the big names, the Googles, the Apples, the Intuitive Surgicals, but you've got the Panera Breads and things now over $100, and those are great trades in the options market because you can get the leverage, you can do it with very little money, and you could do it with limited risk. But you got to look at all this triple digit stuff and say, isn't it really time, if you want to appeal to the individual investor, that you split some of these names? So, as I say, should be interesting.
Yes, so hopefully listeners will get a little bit more insight into this, and maybe this date might move a little bit. Hopefully it will, but probably plan on March 13th of next year. So unfortunately for all of you who are out there champing at the bit for Mini Apple, you have to wait a little bit longer, approximately 4 months or so, and then you'll be in the Mini Apple game. And that's going to do it for the Xpress Block for this episode. And now we're going to roll right into Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is, of course, the portion of the show where we look ahead to see what the markets have in store for us. And it was, like we said, today a quiet day, or a bit of a mixed day on the street. Some names really active, other names kind of sitting there in the kind of late year doldrums. Perhaps we'll have a little bit more of that going into the week. We didn't really hit on VIX too much earlier in the show, and volatility in general. I touched on it earlier in the show. VIX was up about 2.5% on the day today, closing at 15.5 on the old VIX cash. So there was a little bit of that weird upside vol pop that Andrew referred to earlier being felt in VIX land as well. So perhaps maybe we'll start there, Andrew, looking ahead to the rest of the week into next week. I'm guessing, and maybe you concur with this, that we're probably going to be, today aside, we're probably going to have the similar level of some doldrums unless we get some big fiscal cliff news coming out. We might just be vacillating around these handles, and I would probably guesstimate that VIX will probably stay somewhere in these levels or perhaps drop off a wee bit unless we get some Bernanke running off at the mouth again or someone in Congress really making some outlandish comments. So what say you?
Yeah, I mean, if the market action today is any, we didn't even get the regular, uptick from. We basically just had a 4-day weekend, give or take, and the VIX should have been up like a little more than it was just on the theta alone. So it was actually light. Volatility products, actually, the VXX came in small today, so it was light everywhere. So without any fiscal cliff news, what's amazing is there's no fiscal cliff news, so nothing's happening, and then there is some, and then blah, then we pop. So it really is weird, but it's a real binomial type of action, and they're not buying the back month volatility really at all. So it feels like there's kind of a lull here where the VIX is printing because the VIX is taking the 30-day option. It's always the 30-day forward look, and the activity seems to be outside of where the VIX is actually kind of aiming its eyeballs right now. So the VIX is not going to be a great way to really sort of tease some ideas out of market volatility because it's slotting in an unusual place. Like the Jan-Feb for fiscal cliff stuff is a little more bid, and in this week, and even the near-term stuff is kind of bid, the weeklies, but where the VIX is aiming is sort of in a dead zone in the middle. So I don't know if the VIX is going to be super reliable unless we have a huge move.
Yeah, a lot of crazy stuff lurking there in VIX land. You're right. It all is, fundamentals are kind of out the window at this point. It's just whatever they have coming out of Washington or coming out of Greece that seems to throw us into a tizzy these days. It's kind of like when you have a drug stock waiting for some sort of, approval or something like that, where the fundamentals are pretty much meaningless. It's all the fluff floating around the ether that really drives us. Uncle Mike, speaking of fluff and ether, what is catching your eye these days in the market and then the ether floating around names like Apple? Did I throw you with that intro?
Well, kind of the ether and fluff. Well, in terms of ether and fluff, my lawnmower wouldn't start the other day, so I put the ether in the carburetor, popped right off. But then I do too much of it. Sometimes, well, we had some problems if you do too much of it. But nonetheless, ether is a great thing if you need to start up a cold engine sometimes.
Yeah, but that's not a good thing. When my lawnmower doesn't start, I'm extremely happy.
That's a good point. Then you don't have to mow the lawn.
Yeah.
I never looked at it that way.
Well, I have children.
Well, my 5-year-old would do it if I'd let him, but that's a good idea. Maybe if next time I'll let my 5-year-old put the ether in the carburetor. That's something fun.
It's not what I was suggesting, but...
Oh, okay. But anyway...
you guys do stuff a little differently out there in St. Charles.
Anyway, in regard to ether and fluff... I made my debut actually today in selling a 2-week option, a strategy that we've been running for years at Know Your Options. Has just been a QQQ collar. And it's kind of our version of the collaring the cube strategy that the article that was very popular a couple years back, and you can still do a Google search. If you Google search collaring the cubes, you'll see the article that the OIC put out a few years back. But we do kind of our own little tweak on that strategy. And so today, one thing that we did was we actually sold a 66 December week 1 covered call. And haven't done that as of yet. And I know even on this show, we've been calling for exchanges to add those products. So I'm excited. And that it was just the right mix, and I like selling options 2 weeks out if the premium and the volatility is right. And I'm watching the Qs and seeing if it touches this 66 short strike price.
So you're dancing with these crazy new weeklies, huh, Uncle Mike?
So he's just selling them naked?
I got on.
Or you're long some Qs, right? You're long some.
Yeah, we're long the Qs. We're long a March put, and so this is an ongoing collar strategy that we've been doing for years.
Gotcha. And you just now the Qs what? Okay, here's my question for the viewers: what drew you to the 66 line? What sucked you in to sell those calls? What called you the siren song of selling juice? What brought you there?
You've been on the show too long, and you're starting to sound like me.
I know. I was doing my best Longo imitation right now.
Well, what we like to do, we like to find kind of a mix, and that we don't want to sell something that's so ridiculously far out of the money that you're going to get a penny for or something like that, but yet we don't want to be too close to being at the money. Now, when we did this, the Qs were right now, just looking at the after-hour quote on them, it's at 65.16. We were in the mid-64s today, and we were able to get, I believe, 29 cents for them. Typically, what we're trying to do is approximately 1% a month in terms of the income from the calls coming in. And the only goal that we're looking for when selling the calls is just to finance the puts as best as possible. We're not looking to make this an income-based strategy. We're just looking to finance the protection. That's all we're looking to do. And that met the criteria along those lines. And if for some reason we do start going higher, what I want to do with this, and I've done this with weeklies in the past, but never been able to do it on the 2 week side of it, we have a bailout plan. And the bailout plan is that we can roll out and up, so to speak, in that we have the December week 2 call. Let's say that we touch the 66 level. Well, then we have to make the decision, do we A, do nothing, or B, do we buy to close the 66 call for a loss, and then we sell to open the December week 2 67 call or something along those lines? Gotcha. And the fact that we have the multiple weeks to do so, that's what attracted us. Typically, we don't go that close to the money, but the fact that we have a good bailout plan, and I've gone through the scenarios, I'm really excited about this new set of weeklies that we have.
Well, I think that's that's one of the more important parts about these new weeklies is it actually gives, and this is another thing too, I thought that was good that you mentioned, like 1%. You're like, here I am trying to make, decent returns on my money. I would take 1% a month for life and be done. Because I think if you keep compounding at that rate, you make a lot of money. So I think that's a much more realistic yardstick for people to think that are actually trying to use options in a reasonably intelligent manner. So I know I like that strategy. I think that's a really good way to work those products.
If I could chime in here, 3/4 of the public pension plans in this country would not be in trouble if they'd earned 1% a month over the last 10 or 12 years instead of earning nothing.
That means they would have to actually be able to write calls, Alex, and understand the methodology behind that, and that's a little bit advanced for 80% of them.
Yeah.
Considering how much they get paid. It's just like the guy who's like, well, when I want to buy a put, I just blow all my stock out and give up. That guy.
We need to get that guy on the show just to pick his brain a little bit and just to expose that thought process to our listeners so they can see who's really out there managing your money.
You know what? In the heyday of the OEX, one of the biggest sources of volume that came into the OEX pit was an OEX overwrite that was run out of a very conservative fund manager, a company called Loomis Sales. And their target was something like that, about 3/4 to 0.8% a month. And they had many of the public plans. Of course, scale was a little bit different back then. We're talking almost 20 years ago. They had many of the public plans who embraced it because they had such an appetite for current cash flow. And you look at stuff like the SIBO buy right. If you look at the buy right, and I'm not saying I've looked at it, this week, but the buy right index typically generated over 1.5% a month in premium income. Now, that doesn't mean it made 1.5% a month every month, because the underlying portfolio obviously fluctuates. But if you think about that, if I could bring cash flow of 1%, 1.25%, 0.9% in every month, how people's expectations have changed. 15, 16 years ago, people were looking for 15 to 20%, in the market. Now, 7 or 8% a year, 10% a year, to your point, people would kill for those kind of rates of return. They would just kill for them. And of course, the joke in the options industry is as soon as the overwriting starts, the market will rally, because that's essentially what took out the OEX overwrite business. I mean, there were funds built on it. And that interest in the OEX today is what you see in the eMini. You just see that investor hunger for a tradable liquid product that's easy to understand.
I like it, Alex. You're deeply cynical, just like me. So between the Apple stuff and now this, I think you'll do well here on this show. And speaking of this show, unfortunately, that is going to do it for this episode of the Option Block. But before we go, I like to check in with my cohorts here on the old program to see what they're up to that may interest you, the listener. And starting off with you, Uncle Mike Tusaw, what is coming up in the land of KYO? Though I think I have a feeling I know what you're going to say.
Well, what we're going to do is, I couldn't think of anything sarcastic, and I blew it, but
I set you up.
You did. Tonight, Tuesday night, November 27th, we'll be broadcasting live from the Know Your Options webinar network. The eMini Executors are going to be guest speaking for us, and they're going to discuss what they do in the world of the eMini, and not only what they do in the futures world, but how it can relate to option traders. So it's there's a link to it on the Options Insider, right where you linked onto the show. So check it out. We'd love to have you.
All right, thank you, Uncle Mike, and you, the listener, can check out what Anthony was talking about today, what Uncle Mike was just talking about, and click on that link either on the Options Insider or on KYO Know Your Options Inc. and register for that webinar there and check out a little more about what Anthony is going to talk about tomorrow. And Andrew, what is coming up in the land of OptionPit.com?
We have a webinar tomorrow night featuring Jim Bittman from the Options Institute.
Competing webinars. I don't know.
I know. I actually got to get the date right here. I just looked at it. I'm pretty sure it was the 27th.
Now, remember, this goes out on Tuesday, so this will be tonight for our listeners.
It goes Tuesday. It goes out noon. The webinar with Jim is noon, is 12 noon.
Oh, so right about when the show is going live, a couple hours later, listeners, you can tune in to that webinar. So no conflict at all. It'll be a different day.
And it's very good. It'll be a very good topic. Actually, just even appropriate to what we were talking about earlier with the laddered weeklies that have been listed. A good product idea if I have ever heard one. And again, we have our big webinar, the first all day webinar with Jim and the Street and Option Pit, teaching people how to use volatility in their trading. Again, another nice way to figure out whether overwriting or selling some calls against your stock is even worth doing. So both good webinars. One costs money, the other one does not. But check it out. And I know Mark will give you a discount on Option Pit services if you do sign up for the CBOE webinar. So that's worthwhile to check out on Saturday.
All right, thank you for that, Andrew. And last but certainly not least, Alex, you gave our listeners a bit of a heads up of what's coming up over in OX. Why don't you run those down again for our listeners who may have missed it or who were dashing for a pen to scribble it down furiously?
Yeah, thanks, Mark. December 1st, the team will be in Houston. That's Saturday. All the live seminars are done on Saturday. December 8th, the team will be in Boca. If you are an OX customer, come to the Toolbox Bar and look at the Ideas Hub. It's a product that I created the underlying algorithms to. That's the first, as far as I know, brokerage-based iron condor finder, quantitative finder. We're having a lot of success with that here. And now we're going to build it out into futures. In fact, we're going to build it out into the eMini options and the crude oil options. And we're working to get that up and running.
I'm looking forward to that, Alex. I know a lot of our listeners have written in and been very enthusiastic about what you guys have going, particularly on that premium harvesting side. You're luring them ever closer to the dark side there, Alex. I like it.
Well, it's interesting because we built out kind of 4 areas, and the one that's literally gotten the most traction is the premium harvesting side. And as we've all talked about, that's where a lot of the appetite is in the e-commerce brokerage community. About half the volume is some form of income strategy, and what we've done there is put a quantitative tool up, and it's getting a lot of traction.
Yeah, I'm sure you have some internal metrics about how the trades correlate to what you recommend versus how much open interest goes up on those strikes that day or the next day, Yeah,
the numbers are really good, and it is one of the first products that actively promotes the SPX PM, which if you're new to the options market or you want to learn more, as Andrew pointed out, look at the weeklies, look at products like the SPX PM. Lots of innovation in the options market, and then hopefully next quarter we'll have mini options.
Exactly. All right. Thank you for that, Alex. And that is going to do it for this episode of the Option Block. If you'd like to learn more about any of the topics we discussed on the show today, then by all means, surf on over to theoptionsinsider.com. You can find archive episodes of this program, breaking news from the options market, educational articles, analyses from a lot of the people who come on this show on a regular basis, as well as our staff and a lot of other great contributors from the options market, and of course all of the other great programs on our Options Insider Radio Network. You can find all of that over there on theoptionsinsider.com. You can also shoot us emails or tweets or Facebook messages with questions for this show, and if they're interesting, we'll be sure to answer them. But that's going to do it for this episode, and we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.